Good morning, 7:47 a.m. Pacific Standard Time, 5/21/2011. The important thing today with the SMF MMTs, that's the yearly school attendees, learning the markets is that we're going to find out that June can possibly be a turning point. We're going to take a look at all the monthly related important key indexes, indices and things like this, because every market has a cycle to it. Here, this one is a CRX, Morgan Stanley Commodity Related Index. For the MMTs, what they're learning in the school is what Wall Street is really about and what the different kinds of trading divisions and firms are about as well. Nonetheless, is when we look at these things here, we know that we have a monthly reversal on the CRX Stanley Commodity Related Index. We know that there are key names in here. FCX is our one that we like the best. BHP, you got lots of good names in here. That here's one right here, APA. Okay, got Goldcorp in here, got Hess in here. At certain times, this potash does really well. There are different type of companies that have done well, because you could not have, if all of these stocks here did not do well across the board, then you could never have had these monthly rallies to this monthly reversal that we're talking about, that we called. Okay, so these are the names. Now I'm going to get to work with you, and we're going to take this period of time. We're going to take this topping pattern, which occurred in the financial crisis. There is where this reversal came into play, when things were bad, as they say, and it did want to go lower here. And they were already in an exuberant phase, like this monthly top over here. And remember, MMTs, that working with monthly tops and the way that the analysis are done is also going to be your reference to your intraday market making trading skills, long and short, making a market between the public, is that if we continue this monthly reversal into June, well, the important thing of it is that you would be selling short stocks up on their intraday highs, because there's going to be certain one of these names in here. The good names, you got to know what the leaders are, but there's going to be some seasonality weak names in here that will be a contributing factor, and it's also going to be tied into the economy. But worldwide economy is the most important thing about supply and demand issues, and what some of these names really are and what they're about. But this is a good one here, the CRX.X. It's one of our very favorites, because seasonally at certain times you can get long-term rallies, and at certain times the individual names, you can buy them, and they're a good place to be, because that's where the money's going to be. So when we had the 2008 reversal, we consolidated down here, then worldwide stimulus came into play. Worldwide, we just flooded the system with worldwide just millions of dollars of subsidies, and we finally came up here to the 2010 high off of the original lows that we called, and we have all the work because we were part of that low all the way to here, and then we were part of this too. So you had a yearly reversal from this point, but you had a double yearly breakout. 1, 2, 3, 4, 5, 6, 7, 8 bars out of 11. Out of the, well, there's, let's say 8 out of 11 is that I didn't really count that narrow range one. I'm looking for the broader monthly ones, but look at the broader monthly breakouts. That's the key. Narrow range monthly ones are in a category themselves. There is a lot of indecision when you have a monthly movement that's narrow range between the top down selling and the bottom up, kind of like this one was over here. it was very indecisive, this monthly bar right here. And it did decide the following month with a down move. That's what we're going to be looking for right up here, MMTs. Now, everyone knows that this is probably one of the most important related indexes out here. Because what it tells us is, it tells us where worldwide growth is, tells us a lot of things. And we understand why we have this double yearly breakout from this correction down here. QE2 came into play with Bernanke, and we made these monthly, yearly 2011 tops. Now that's the 2011 top, and think of this bottom over here in this index. This is why I'm taking a little bit more time on this one than I will other ones, because the same rule will apply throughout the analysis and the rest of the sectors and indices. We put that bottom in, and this is the beginning of a top. We made the high, we've come down, we came back up with the counter trend monthly, 1 month, 2 months here. It's the month of May reversal here. We understand it, and we're looking for what changes are going to be. The thing about it is, the bull rally has a 24-month bull rally behind it. I didn't say bull market economy. I said bull rally market trend behind it. So that means that there's going to be a period of time where we're looking at where they don't stop. Yes, we call these reversals because they're good short trades in the market, but they don't, but then they take off. And same thing up at a top. When a top is getting put in on a calendar year, this is all 2011. Look at the distribution monthly bar so far. It's not going to be final till the end of the month, but it takes out that monthly bar and that monthly bar. These two monthly bars here, this would have been April and this would have been February. They came off the bottom, okay, but look at the narrow range right here. This is what happens in these narrow range monthly bars. Whether it be a monthly bar, a 3-minute bar, 15-minute, or 60 daily, weekly, it doesn't matter. They all mean the same. This one here on a monthly level, there was a lot of indecision. There was a little bit more people, though, that was always bullish because you got that monthly wick. That's where people were buying dips in here. But look at the selling here. It starts with the gap down. So far, if we continue on this route, we're going to see if this one reversal bar, monthly bar, is much greater than the last two up bars, mathematically, MMTs. Because what it's going to say is that it's going to give us a clear picture of where this correction is going to go and the reasons why. And where does selling pick up? And what is that tied to worldwide economies? Okay, because this index here, when they pull back and get support, they're going to bounce. Because consumption, the consumption around the world, that means that everyone's hoarding up the products that we need for our standard living and our health and nutrition. There are many more people around the world. You got China, you got India, you've got all of these really big populated areas that are going after the supplies, which also means that if the supplies are being bought up, that means that there's less what? Inventory to the market, which drives prices higher. In this commodity one is one of the most important ones, because if China starts to slow down and starts curbing their economy and starts restricting people, and productivity and the cost of things are doing what they're doing over there, and they get a slowdown, then that means they're not going to be using maybe so much of all of the commodity related orders that they would be having, like they did in 2010 and 2009. So it's very important to know this index and what are some of the key elements it's going to be tied to, just outside of what the monthly analysis is. Right now, seasonality wise and worldwide events, have we got extremely toppy up here. Margin requirements were raised, but if we continue this move down here to the blue line, That's called a 10-month moving average. The 10-month moving average is at 938.99. When we come down on the first pass of testing that blue rising 10-month moving average, which is quite bullish for the bull, the bull's case is that it is for the bull. However, when we're looking at changes in potential major changes in trends, we're going to monitor this and where they come back in at this key support level when they hit that. If they sell through the blue line, then commodity prices and these names will be selling off. Every one of these names in here, not every one, but all the good ones, Gold Corp, I mean, just about across the board, they're all overbought. Some are overbought more than others. And when we get into a monthly overbought phase, MMTs, we must remember the amount of exuberance, irrational exuberance behaviors take place to drive these to all-time highs. And they always end up really bad for the investor, MMT, on this commodity one here. And the thing about it is they raise the margin requirements. That's part of that monthly reversal. And if we come down and we hit there and we bounce, we'll be getting net long the individual leadership names for the daily trade management in the SMF trading division. So if we fail and sell through it, you'll have a lot of people getting out of the market below that blue line. And there's a long ways down here to its 20-month moving average, which is right here. So when markets change, directional movement, rule number one, monthly reversal must be 2 to 3 times greater than the previous up months. Volatility, I call it volatility trends. I call it the where people have less fear. Everybody wants to put money to work. There's a lot of indecision in the market. People don't know quite what they're doing. They don't understand Wall Street. Even the fund managers are mixed up. They don't know. They just got different kinds of simulated models they've used before, but they all fizzle and blow up. Rule 1. At the end of the calendar month, we look at the depth of the point from the high to the low versus the last up months here that were selling would continue to come lower. We would then be picking up the key leadership names in this CRX.X. So the ones, and we'll do this off the video. I'm not going to go into which names. We already trade them on a daily basis, the ones that are in here, MMT, so you know what I'm talking about. The people that are here in the school. So that's how we're going to look at this. And this index right here, to me, is a very key index out of all of them because it has a lot to do with the way things are being. They have their inner exchange models internationally around the world. And the consumption is part of other people in emerging countries. They got more money now. They can consume more. If they can consume more, dollar-wise, to their populations, then pullbacks in these areas and certain names are going to be really good. So the key is how to identify a monthly, yearly change in trend. This is the double yearly breakout, bullish breakout from the bottoms in this particular one. And it was the place to be. When that thing was the first one to go up. And it's called a double yearly breakout trend. That's year one. That's the pullback as they should. Remember, what people don't understand, everything gets overbought. Everything was overbought here. And we're overbought up here. We were overbought here. We came down, but we rallied higher. So when I start seeing this reversal, it started right here. Look at how this reversal and this one started. Look. It started with that monthly, but look at the last 2 months right there. This was bigger on the downside than the last 2 previous months. So far, as of 5/21, this monthly reversal is greater than the last 2 months and may even be greater if it continues to go down and sells through. It's going to take out the previous 3 months to confirm that either one of two things happen. It confirms that there's a market top in play. Then the next part is from the bottom back up to those highs again is going to be where the real exchanges between the buyers and the sellers and supply and demand and everything going around the world and what everything is doing and how it's all got its ways of doing things, is that the buyers will either show up, and if they don't show up at support here on this one, then we go lower. When we were putting the up move off the all-time lows over here, we started with what we would like to see. The 2 months that were right here, these 3 months, but particularly these 2, were much greater than the last 2 down months, and these were diminishing months at a bottom. We called that bottom very clearly. We have the work to prove it. And we've called short-term tops, and we called this reversal here. The thing about it is, look how this is starting. Look at how this is starting. You got to remember that back in 2008 at the top, you were at its all-time highs just like you are right now. You have gasoline, oil, sugar, cotton, wheat, you name it. You want to be part of it. There it is right there. And that's all about the people consuming worldwide. It's driven these prices to this level. So the playing field is going to be different than what it was over here and what it was over in this time frame, because the consumption levels have changed and the productivity levels have changed. So you got your input and your output, and you got everything that goes on around it, and that's what all of this is about. That's the economic and the fundamental part that we've been training you on for several months. Is how do you take the current economic environment and then relate it to the overbought market that we have called for. We called the bottom, we're happy. We called the reversal, we're happy. So now you take a look at that monthly reversal, that they always start this way. Rule number 1. And every one of these that we do, and we're going to use the CRX as a protocol for the MMTs in the school right now, so that when the other ones are only a minute long or a minute and a half, you know how to apply the format and the analysis. The analysis is the format. Our analysis, SMF, not the public analysis, SMF analysis. Under our new website design, you're going to be able to see the public analysis, and above there, you're always going to have the SMF analysis, and people can compare if we were wrong or if we were right. Rather, doesn't matter what people think. The reality is that they start like this. How far they go, or if they bounce. When you have bull rallies, they have a tendency to bounce off the bottoms pretty good. Because bull rallies, just like the bear rally down, and then when the bear, it took a long time, it took several months here to put in that bear bottom to turn. So the bear rally was over during this monthly phase. And when we look at tops, we look at them in an invert way, and we look for the distribution model. This is a very important special CRX commodity related index. The rest of the indexes and indices that I do will follow this one, so that when they're 1 minute long or 2 minutes long, you're going to know. And the key is, and rule 1 is, you have to have a big monthly reversal. You have to have the month of June, you would have to sell through the 10-month, you'd have to come down, but every trend that starts a new change is always going to bounce off of support with price volatility. When they come down and test, they have price upside volatility just as the downside volatility. So you got downside volatility, and then you have upside price action volatility. So in bull rallies, when they come down and they hit these key support levels, the trade management is to rip those bounces off that bottom, sell it quickly back to the public. That's what a market maker does. And I'm going to conclude this video. I am saying that we have a potential change in the trend, and that we called for the top in a lot of these 3 weeks ago. They're all on the home site there. And I went through all of these indices and indexes, and you can see where they were then. You can see where they are now, because for the MMTs that are in the yearly school, it's very important that they learn what yearly, monthly, using a monthly chart, but what yearly trends are about. This is a very strong trend. And things have a way of changing, and this is a very strong trend. It's a double yearly breakout off of the yearly reversal. So we had a yearly reversal. They came back in, blew that up, pulled it back, and have made higher highs on a monthly level 2 years in a row. Well, 2011 has to be a little bit showing us where a potential big change can be made here.